Hi, welcome to Forex In Four. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Wednesday, May 25th, 2011. This morning I'm talking about the saga continues, and we haven't really gotten any clarity in the markets over what's going on with the European debt crisis and what's happening. Apparently there's some news that perhaps Christine Lagarde from France will be putting her name in for into the hat there for consideration for head of the IMF. Okay, but we're looking at the Eurozone. There's not a lot of news today coming out of Europe. We had a German consumer confidence survey which came in just slightly lower than expected, and Italian retail sales came in worse than expected as well. But other than that, there wasn't a lot of news coming out of Europe that was going to really tell us anything different. So it looks like we got down close to about 140 overnight. We've bounced a little bit higher, and markets are setting up here today to open a little bit lower. European stock markets are just about flat. We were down a little bit overnight in Asia. U.S. is set to open lower. We've got commodities a little bit lower, but gold higher. So that's sort of the dynamic that we're seeing right now. So not a bunch of news there for Europe. So it's still kind of dragging out, and we need to start hearing about some sort of solutions coming forward, so that the market can get back to business. So I just want to take a quick beat. The pound's higher. Came banging through 162 here overnight, held 161 from yesterday. Okay, GDP report came in. Figures came in as expected. Quarter-over-quarter growth, 0.5%. That means the year-over-year numbers at 1.8%. All right, that actually was a pretty good number, even though private consumption was down. That's going to be a concern for them in the UK, but their exports were up a lot, so that's also a good sign. And considering that the currency has been fairly strong as of late, that's a good thing as far as exports go for the UK economy. Now, an area not having a good time with exports is what we're seeing out of Japan. Japan came in and they had their first negative trade balance this month for, the first time in I think it was something like 30 years. But obviously that was to be expected. They had the earthquake that messed up the supply chains, which messed up the exports, so on and so forth. And the exports actually came in a little bit better than expected. Okay, they were expecting around 700 billion yen shortfall, and it was only 463, something like that, or 496 for the month of April. So it was fairly in line, or actually it was better than what was expected, considering the damage they've done. But nevertheless, yen's back up over 82, and it looks to be just setting up shop there. It could, may need to put in a couple days of sideways there to get itself firmly ensconced above that level. But it's widely assumed that the Bank of Japan is going to become a little bit more accommodative. They're trying to encourage lending to help the rebuilding process, and the government's going to come out in the next month or two with an addendum to their budget, basically, which is going to address the spending needs based on what's happened from the earthquake, and at that time the Bank of Japan will probably do something with monetary policy to make it all go over smoothly. So it looks right now like the trend here for yen is going to be weaker. Okay, but we still have risk aversion in the market, so the yen does benefit from that from time to time, because we'll see the risk in the market, and people will buy yen on that instance, even if Japan's trying to weaken. So we'll see that. We've got Aussie lower. Okay, Aussie just around 105. Just putting in a little bit of a challenge here to the support. Okay, previous support's about 105. Now it's a little bit of resistance. Okay, we had a leading indicators index came in overnight by 0.5%, which was as expected. But construction work was a little bit lower than expected, 0.7% versus 1.4%. But Aussie's been trading on risk themes, as has dollar CAD. We can look at the loonie. Okay, we're up just around 98 cents. That 98 cents area got breached yesterday, but you can see that that's still a good area of resistance right now in the short term. And it looks like a lot of these charts are starting to do the same sort of thing. They're coming up against these resistance levels or support levels from where the dollar is, whether it's 140 on the euro, or 98 cents on the loonie, or 105 on the Aussie, and they'll probably do, or 82 too on the yen as well. So we'll probably do a little bit of a dance around here until it can sort of firm itself up, and then at that point it'll decide whether or not we've got support for dollar strength, or if we're going to see some dollar weakness. So it's really going to be right now I'm going to call these the risk stops, because depending upon which side of those areas we close on, that's going to possibly determine whether or not we're going to be in like a risk appetite, risk-taking mode, or whether or not we're going to be looking at risk aversion. So, today is sort of not a big day for stocks so far, but you can see these risk currencies selling off. We still have the Kiwi higher though, which they had decent news on the inflation expectation yesterday to show you that they're coming back up and approaching 80. So I imagine that that's going to be an area of resistance as well, which again is going to set up this whole idea of, okay, are we going to see these currencies weaken from there and the resistance holds, or do we see a new leg where now there's going to be dollar strength, whether it's the end of QE2, whether it's risk coming from the Eurozone, whether it's China slowdown, whether it's problems with the debt ceiling here in the U.S., or whether it's just overall bad numbers. We've got U.S. durable goods orders out later this morning, and we're already expecting a decline of 2.5%. So they've really set the bar low on that one. So we'll have to see what happens there. So that's kind of what we're looking at. I mean, it's sort of a strange time right now, because it's really hard to get a gauge on where the market's going. We're sort of right at these tipping points here where we could be seeing the next leg down, okay, or we could be seeing a little bit of near-term support being put in, which could boost a rally off of this point. So it's really dependent that you, and really important that you take a look at these support and resistance levels. Keep an eye on them so you know where things are, and then once the price makes a move or makes a break to one side or other of those levels, that's the direction you'd want to trade, and obviously put your stops below those levels. So that's what we're looking at today, folks. Don't have any news from Europe yet, so we're going to be keeping an eye on that, and U.S. durable goods later this morning, as well as house price index, and that's going to really tell us where we're standing today. So that's what I've got. Good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.